Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants.
This podcast is for entertainment purposes only and should not be relied upon as the basis for investment decisions. Podcast guests and their clients may maintain positions in the securities discussed in this podcast.
All right, we're here. Andrew is here today. Claude's off again this week. Hopefully back next week.
Slacker.
Let's get into it. It's earnings season. It's a very busy time. We'll run through a few things that are going on. Maybe to kick off, we've got a bit of our usual good news. Here's one that I think I just mentioned before we started recording, Andrew. A woman with paralysis speaks through an avatar 18 years after a stroke thanks to a brain implant and AI. So she's got a brain implant, some electrodes connected to her brain, interpreting what she is thinking, connecting that to speech and talking through an avatar.
Yeah, I mean, for some people like myself, there's not much of a filter between what the brain thinks and what the mouth says.
True. It'd be awkward, right? Like you might lose all of that filter.
Yeah,
like, Andrew, how dare you?
Someone walks in the room and is like, "Oh, this idiot again," or whatever. Yeah, you'd want some, like, I don't know, some fail safes in there that just prevent that kind of thing.
Yeah, that's really interesting. I hadn't thought about that. It'd be interesting to see what happens as we get better with all this like mind reading, brain scanning technology. Maybe there'll be like privacy filters. I'm sure Apple's working on it.
It reminds me, was it the first Austin Powers movie where he says, one of the side effects of the freezing process is that there's no internal monologue. I won't say what he says, but that's funny. So anyway, good news. I'll take it as good news. Yeah.
Any other good news? Any other good news you've seen?
Well, I mentioned this to you, like I saw, and then you threw a bit of cold water on it, which was the idea of, when I say, like, I looked into this, I saw a tweet and scrolled past it, hit like and scrolled past, but they've put like these big vertical sails on a container ship, essentially. So like an airplane wing. Basically, the idea is that, like a sailboat, and it like saves up to 40% of fuel and blah, blah, blah. And you said, they've been doing that for years and it's never come to anything. This was a trial. So maybe it's one of these things that doesn't amount to anything. But
yeah, I mean, maybe I was just being a bit cynical, right? Because there's always things, we try things for years and then eventually they work and, they laugh at you and then they change the world or whatever Elizabeth Holmes said.
Yeah.
But no, I think it had been something. So I used to work in container shipping many lifetimes ago. And that was always something. I just remember it being in the news, like some video of some like a sail hanging off a container ship, and everyone, before I got into the industry, being like, oh, that's just amazing. That is how it works. And it's like just realizing how much, I don't know, energy they use, like just the dirty, the tonnage, the current like reality of what is needed and the reliability and everything. But I do think something like that, where it's just like it reduces usage of fuel. I mean, at the moment, as I was saying to you before the pod, they use bunker, which is like tar, basically. It's like the cheapest oil product there is, and still environmentally more friendly per kilogram because it's so efficient to move like via a body of water. But yeah, it's an interesting one. And that's also, we were talking about, kind of came up a few weeks ago about emissions, right? Because they're one of the big areas cutting out sulfur, because we're not polluting with sulfur anymore thanks to changes to shipping. It's actually leading to more global warming because the bright sulfur isn't blocking the light reflecting out. So it's pretty wild.
Man, yeah. It's unintended consequences, right?
Unintended consequences. Big.
The take-home message here is burn more sulfur. Is that right?
That's it. No, actually, no. Seriously, that's one of the solutions to climate change that people have said is not to burn it near the earth where it could like hurt our lungs, but to release sulfur high in the air. And it would, if you made clouds 10% more irradiant or 10% more reflective, then it would block about 1% of the sun's energy coming to Earth because of how much cloud is covering, I guess about 10%. And that would be basically make Earth 1% cooler. So like you could potentially, and it's kind of, I don't know, I'm kind of in favor of geoengineering as long as it's like trialed and tested and not something that can run away uncontrollably, because I think we already do it. We already do this huge geoengineering. We just don't do it as a planned controlled experiment. And when we don't do it as a planned controlled experiment, it just happens and no one says anything about it, like stopping the sulfur pollution. Right. But when we do it planned, everyone freaks out because they've watched a lot of sci-fi about the end of the world from these things. So
we might have to, might just get to the point where it's like, all right, no wrong answers anymore. Let's just try it. Let's see what sticks. And maybe we go the Futurama solution and just try and like increase the Earth orbit a little bit.
I haven't seen that one. Well, they move it further away from the sun.
They move the Earth further away from the sun. Yeah.
What was it? Mr. Burns in The Simpsons? Ever since the dawn of time, man has yearned to destroy the sun, and then he blocks out the sun so that everyone uses more. Yeah. Anyway.
Lots of pop culture references today. I love it.
All right, let's get into some companies because there's lots of news coming out at the moment in earnings season. We'll keep doing this next week. We'll have more to run through. Yeah, maybe where do we want to start? What's some things that have caught our eye? I mean, one bit of bad news that I don't know if you saw much on it was Appen, Andrew, but it was down about 30% in a day, but also revenue was down. Profit was down a lot, but I think more importantly, revenue was down. And yeah, I don't know. This is one, it's kind of one that, a few months ago, kind of around May, June, it put out this presentation, had some nice charts, some kind of buzzwords talking about how they're going to be getting into generative AI. And it just kind of like a lot of funds and I guess other investors just ate it up. Like it kind of doubled almost in a very short order. Got up to like over, 370 from around 230 or something. And it just didn't seem to have much material there. I was kind of surprised. Maybe I was annoyed because I didn't own it and it was going up. But I was surprised because it didn't seem to have much there. And then, next results have come out and things are going backwards pretty fast. Yeah, I don't know if you had any thoughts on Appen.
Well, I just, ostensibly this is a podcast about small caps. And this was like nearly 5 billion. Right?
Yeah,
in market
it's a small cap now. Yeah.
Now it's a small cap. We can talk about it. So like when I say like, let me have a very quick look here, but yeah, 235 million odd. So just such a dramatic fall from raise. I mean, these things get very spicy. There is a part of me that goes, at a point, is there an argument to be made? Just to take it to its logical conclusion. I mean, would you buy it for 0.1 of a cent? I said, probably. So the question really is at what point does it sort of hit that threshold where you can sort of say two things at once and both be correct, which is, okay, the opportunity isn't nearly as large as what we may have initially thought. Yes, earnings may even sort of slowly decline over the coming decade, but at a certain point, managed in a certain way, there's still value to be had. I don't know. These are pennies in front of a steamroller kind of thoughts, and so I've got zero interest in trying it. But I am open to the idea if anyone wanted to make that pitch, because I feel as though, as much as we like to pretend that we're not influenced by the share price, we are. And when you see such dramatic, changes of fortune, I think everyone is going, nah, not interested. And then maybe private equity comes along and launches a bid at 250 million, and actually gets a bargain. So I'm shooting from the hip here. Do you have any thoughts on that?
Yeah. So I think obviously I agree with you. You're right. There's a price you can pay for it. It's got 50 million of cash, although it had raised 60 million in May. So having 55 million cash isn't as impressive, but it's got 55 million in cash and, 240 odd million market cap. Yeah. I think there's definitely a price for it. It's just the challenge of, when something's shrinking, it's very hard to know where that price is. Like, it's very easy to still pay too much when a business's revenue is shrinking. So revenue is down, I think, 24% overall. Yeah, I guess as I kind of wrote a long time ago in the inflection point piece, for turnarounds, I think it's easier just to wait until they've turned, see the sign that there's progress there. You miss some of the upside as a result, but you miss a lot of losers as well. And so I think that's probably the better case. So at least that's how I'd like to think about something like Appen, is seeing, can they actually turn it around and get it growing again? It had clearly benefited from a more narrow type of AI than, I think the market realized, in that it was very focused on search engine optimization, and the search engines kind of got, to a point where they're like, okay, we're good. We'll do this slightly different way.
We'll take it from here. Yeah.
Yeah, pretty much. And that just stalled their business, and now is just, fading the other way. So yeah, I think it's definitely one to keep an eye on. If it did kind of reboot, the kind of premise, I still think the idea that, humans have a role to play, and there's having a crowdsourced element to interact with AI is still, I could still just see the case for it, because even with all this generative AI, right? Like, it still has hallucinations, and we don't have any machine generated way to spot those hallucinations. Like, humans are still better at spotting that than the AI. That's why they happen, right? That's why when you go to ChatGPT, it even now still says some weird stuff, is because we haven't developed a system for it. So I still think there's a role for a crowd until the point where AI is better than humans at everything that humans care about, which may come, hopefully not for a little while. So we're ready for it. So I still think there's that premise is still there, but obviously they just haven't been positioned for where tech leaders need them at the moment. And that's what you'd want to see change, I think.
Yeah, no, I agree with all of that. I think what's always stayed my hand here is that, I mean, it's very easy to sort of talk about AI at a high level, but when you get granular, I mean, just so far out of my depth very quickly. And we've already seen here how rapidly it's changed. So when you're looking at a business, you're trying to value it on, future cash flows, like from now to kingdom come. And so when you're dealing with a coal mine, or I don't know, even an airport or something like that, it's always a difficult task, but there are some tasks that are a lot easier. I have no idea what the AI training industry looks like in the year 2028. And the way that, especially growth companies get valued, we just put a lot of emphasis on cash flows that are 5-10 years plus down the track. And, it's not that, I'm definitely bearish on it, but I just have no way to handicap what this, to my initial point, I really don't understand what I'm doing when I get into the weeds of it. And what do the weeds look like in 5 years' time, 3 years' time? No idea. 10 years' time, absolutely no idea. So it would have to be pretty cheap before I got interested. So what, about 1 times annualized sales at the moment? Getting there. But yeah, a little bit too hard basket for me.
It's a hard one. I mean, it's one where you just won't ever have that much visibility on, because it's a technical enterprise sale where not many people know about it. Like, they keep it intentionally quiet because they're trying to develop their AI and not tell everyone else what AI they're developing. The customers of Appen. I do still, there's still a price, but you're right. It's always just been it's a spicier one, basically. I think it was always higher risk and just stays higher risk as it grows. It's not like other businesses that become lower risk as they get bigger.
Yeah, be different too. We'll move on, but it'd be different too if there was sort of like free cash flow and all the rest of it. But on top of all the sort of the challenges,
yeah. When it was more highly valued, I think
they're losing a ton of money at the moment. So anyway, one maybe for the watch list.
What else caught your eye? Anything else caught your eye?
Look, I'm still catching up on a lot. So I've been so tardy, my friend, on valuations, like it's embarrassingly. So I'm trying to sort of catch up on a lot of that. But I had a crack at Jumbo Interactive the other day.
Yeah.
So these guys do lottery retailing. It's a really nice little business. I've got to say, I've held it for years, and I kind of wish I'd bought more at the time, because it's done pretty well. It strikes me as an incredibly defensive business. There's the kind of business that does seem to be very small little treats, I guess, that we all spend a few bucks on a lottery ticket. There's the online penetration, like sort of going from the newsagent to online. It's amazing how long that has still got to sort of run. But they've been very consistent in how they report their metrics over the years. And it's just everything sort of bottom left, top right, profitable, dividends, wonderful cash conversion. They made some very big acquisitions over in the UK, which really just gives them sort of a foothold there. And so they've got the sort of the traditional lottery retailing business. They're basically a reseller, but they've also got some software as well. So they basically white label, and it's like powered by Jumbo kind of software that they do. So it's a good sell for charities and institutions like that to sort of help raise money. And it's a good story, I suppose, but it's delivering. So I think that's a pretty interesting business. I think it's probably still a bit undervalued without having to make really ambitious kinds of forecasts. So it's sort of anyway, I thought it was interesting. I don't know if you've ever looked at it.
I have, I guess the kind of risk I'd always thought with it is it's like a reseller of these lottery tickets, right? Like, it adds a margin on top of the lottery ticket to sell online. Yep. But there are other ways to buy those lottery tickets, and I think that the other ways, like, they're also selling online. And I guess these guys, Jumbo's just better at selling online is their edge. And so I just kind of, I'd always just been concerned. So I've looked at it. I can definitely get the appeal of it. Like, it always looks very attractive if this risk doesn't happen. But I've just always been concerned that they just start losing share, and the fact that you can buy them cheaper elsewhere starts to hurt them in the long run. But it hasn't so far.
That kind of happened, right? Because Tabcorp said we're going to charge you more, on that.
Yeah, they renegotiated, didn't they?
Yeah, they renegotiated. That's a 10-year deal. So what are we? We've got another 6-7 years to go on that. But you're right. You're absolutely right. I just find, in terms of the total transaction value that's being processed through lottery retailing, it's just been growing really consistently. It's interesting. It's kind of like a movie studio or a game studio in the sense that there's one of the key metrics to look at is, it's obviously if there's a big Avengers movie or a new fortnight. That's wonderful for those kinds of companies. For these guys, it's the big jackpot. So when you get sort of excess $15 million, everyone plays. Like it really makes a difference. Yeah. And they've kind of changed things into the whole industry to sort of make large jackpots more often. So it's harder to win essentially. So they jackpot more often. And the other thing that was really interesting as well is that Jumbo put its prices up pretty significantly, actually. It's like zero impact on volume.
Yeah, wow.
Yeah, they got the app is really cool. I use it myself.
Do you play weekly?
Do, man. Mm-hmm. I've got my Hail Mary. And so here's my rationale, right? So they call the lottery a tax on hope, which is just brilliant. Like it is such a tax on hope. But I figure, because I buy the minimum, right? And it's sort of like, I'm never going to sit on my deathbed and go, oh man, that $2.70 I spent each week. Oh, my life would have been so much better. What have I done? Like, I'm not going to care, right? It's a complete irrelevance. But I'm in with a chance, you know? Mm-hmm. We know, and this is one of these, it's a 6 degree of separation thing. Like everyone knows someone who's won the lottery. You know, yeah. We know 2 people. It's one of the ladies.
Really?
Yeah. And oh man, it's a long story of woe. Where it's that usual sort of like, hey, we won, tripping with diamonds the next day, and then like 6 years later, I think it's like mostly gone. But I figure someone's got to do it, so might as well be me, right? That's my rationalization. Don't at me on Twitter. I know it's dumb, but it's got a really cool app, right? Like it's really seamless. They put a lot of effort to that. And so I'm not sure. I actually agree with your point. I think that's actually a huge risk to monitor. It's just that I guess my retort would be, it's not in the numbers yet. In fact, there's this really incredible momentum there. So yeah. Anyway, I was enthused.
Yeah. No, very cool. Hey, not a small cap, but I just thought in the news and interesting was what's been happening with Qantas. It's I thought just want to chat about it. I'm sure you've got a rant there somewhere, but
you know it.
Just like complete regulatory capture. So the government blocked a competing airline coming in, and the rationale seems to be so that Qantas can have more profits, and because Qantas just bought some planes that it needs to earn profits on. Mm-hmm. And it would obviously be to the benefit of people, but through lower airfares, more competition, like all the stuff that we normally like. Yeah, it's just stunning. I messaged you guys in our WhatsApp that, like, what was it? He was like before the committee saying, we're not concerned about, Qantas is not worried about competition. So I'm like, yeah, you're not worried because you are, lobbied to control the main, to prevent your competition from entering the market. Yeah, I don't know. It's just wild. I guess it's something, I guess you kind of like it as an investor to find these things, but obviously pretty big net negative for society to have that kind of regulatory capture.
What is it with airlines in general and the jingoism that surrounds them? Like, it's sort of like, oh, it's Australia's airline, and it's still called Australian. It's all this nationalistic pride. Like, it's a private company. Well, a publicly traded company, right? Like, who cares what we did to them in the GFC, the pandemic? No strings attached. No strings attached. Here you go. Like, gosh, I'm sure a lot of people who run a business out there listening to this go, well, that sounds really great. I would love that. You basically give Chairman's Lounge access to all the polys. It is 100% regulatory capture.
Chairman's Lounge is brilliant, by the way, from like a business strategy perspective. A secret lounge that you can't pay for, you just get invited to, and A-list celebrities and politicians are who's invited to it, and some senior execs. It's like all the most elite in society. You just give them a secret room where they get to be elite together, all to benefit.
Have you ever been in?
Have I been in a chairman's lounge?
You haven't been?
We're not allowed to tell you commoners about that.
Oh, you must try it. You must try it. Yeah,
I wonder if there's another level beyond chairmans. I always wondered about that.
Is there like another? You get to sit on the pilot's lap,
sacrificing some animals or something. Sit on the pilot's lap.
It is so egregious. But the thing is that it just gets done. I don't know if this is more of a Trumpian era kind of thing. Everyone's just sort of worked out. It's like, actually, don't even have to try and keep this stuff secret anymore. Just do it, right? People will rant on social media, and then we just let it get away with it.
It is bizarre to watch as a guy that doesn't really follow politics too much. It's bizarre to watch them just be like, yeah, just wanted them to have more profit. Like, it's like, as you say, a bit more naked.
I mean, there is, look, here's some credit to, well, not credit, like facts, I suppose. I mean, over the last 10 years, they've gone from $1.50 to $6, right? With a pandemic in between there. That's a remarkable story. Had you sort of gone back to 2013, sort of said, hey, the next 10 years is going to look like this.
Yeah.
You think, okay, maybe they survive, but not that they sort of go up 4x over that
and
time.
It's kind of weird. I don't know, like in New Zealand, they've bailed out the airline a bunch of times, but the New Zealand government owns like 50% of the airline now, you know, like it's kind of a different thing. And I think there's a case to be made for having a national airline. Like there's a lot of, you wouldn't want another country to say, oh, no airline for you. Like it's a pretty vital part of commerce and everything. But yeah, I don't know. It kind of makes sense that the government owns it.
No, I don't think so. No, I don't think. I think there will always be a profit motive. You know, there will always be someone who go, yeah, I'll give that a crack. Richard Branson did it. He should know better, but he decided that he wanted to do it. Like someone will do it, right? And I'm not saying that there weren't certain measures that sort of needed to be taken during very unusual times. We could have done it like the Kiwis. Like, can I have some shares for this? Can I give you a low interest rate? Like, there's a million ways to kind of do it. And I will call the bluff. I will call that bluff any day of the week because someone will come in and do it. It's like, oh, there's no flights into Australia anymore. Around like, oh, I'll do it. And let's say that it is owned by a foreign national. So what? Flights are still there. I mean, half of the big companies on the ASX are significantly owned by foreign entities, right? I just feel as though what matters here that I can get on a plane and fly to Melbourne if I need to or whatever. And that service, I believe the free market will provide is my contention.
Yeah, no, I understand the argument. I think that works in like a world where we don't have like war and geopolitical whatever.
Oh yeah.
But no, I agree. I think that maybe it still does work, but yeah.
But even then, we've got the C-130. Like the military has aircraft, right? We've got an air force, right? If we need to like fly, if we really need to get stuff around, we can do it.
So much of our food comes in and stuff, but we couldn't have that. Our air force, I don't think, it'd be we'd be pretty hungry. I guess we'd survive. We'd be eating our local stuff. We'd be missing.
We're a net exporter, aren't we?
Medical stuff, medical things. There's heaps of stuff that comes in quickly on airplanes.
Yeah, that's true. Well, let's hope we don't have a big nasty war that. But I mean, I guess you know my ability to fly the family to Dreamworld for a weekend is like very low priority during wartime. So I guess. I don't know.
Speaking of war, it's a good segue. DroneShield was one that had some results you had to look at. Did you have any thoughts on that one?
There wasn't any surprises in DroneShield's results. They kind of this is the company that's just sort of we've touched on it before. It's fascinating to me because it just feels as though there's everything about it is stonky, right?
Stonky.
From the name to the story, like it's a very easy stock to laugh at. Having said that. Like we've spoken to the CEO a couple of times, a straw man. There's a business here, right? And revenues are growing insanely fast. Ukraine's obviously been a big tailwind for them, but they got huge orders coming in. They got huge capacity to do that, to ramp up and meet those orders. So they did 17 million in revenue last year. So there's been 3x growth just in the first half. They report on a calendar year basis. So they've gone from 3.7 to 11.5 mil in the first half. But based on what's already locked in, you can sort of thumbsuck. I think Oleg CEO sort of hinted around 70 million for the full year. That's going from 17 to 70. They're right on the cusp of profitability. The other thing that's interesting here, I think, is that there's always disruption threats for any kind of technology business, but the barriers to entry are pretty significant here. And once you're sort of behind the fence, and you've got the certification, you've got the relationships. It's not that you're bulletproof forever, but it gives you such a dramatic lead. And drones they're a massive tactical advantage on the battlefield. Like it's just the world we live in now. It's sort of easy to sort of giggle and smirk. It's like, no, they're like, follow what's happening in Ukraine is like a major bit of kit.
I heard Ukraine's facing 10,000 drone launches per month.
Right.
I don't know what that encompasses. I heard this from another company, actually, EOS, which does drone defense technology as well.
Right.
In one of their presentations. So I don't know if that's like some of those are just like maybe a little drone flying above some soldiers or something, but 10,000 is it's a lot of drones to deal with, right?
Actually, he explored, he went into that for us in the recent interview we did. There's sort of like 4 classifications. There's rather big sort of predator drone type ones, right down to the little ones that are a little bit above maybe what you get at JB Hi-Fi or something like that. So there's a whole different class there. But yeah, they are very, very, even if it's just surveillance, right? Or recon or that kind of stuff. So anyway, I don't want to over egg the pudding here, but I feel as though I actually tried to give a bit of a valuation on this, and these are as you know, Matt, like super hard companies to value. Like I don't know how long's a piece of string, but I kind of feel as though they've got this. I'm always a sucker for a long-term aspirational target because it just gives you something to like put your hooks into. But what
is the TAM like World War III? Is that the?
Yeah, it's a massive TAM. But what have they sort of said here? They've said 5-year target 300 to 500 million in revenue. So I think you can kind of like shoot towards the lower end of that, shoot towards some low margin assumptions and the rest of it. I think you come up with a valuation that's a bit above where it is. And I think what always tends to get investors. Now, I'm not saying this will be the case. By the way, I've got like a 0.5% weighting on this, very, very small sort of watching position on this, just for disclosure. But when you start playing around in your spreadsheets and whatnot, it feels stupid to put some of these numbers in, but they're not impossible if you know what I mean. So the downside here is that they just get flush with cash. They start doing all kinds of stupid acquisitions and they start moving to all kinds of adjacencies and they just torch a whole bunch of shareholder capital. I think that's probably one of the bigger risks that I hear. They lose any cost discipline. And we've seen the story play out a million times. But if they really focus on their niche here, and you're only going to take a handful of sort of really big orders to move the dial here. There's a lot of software revenue as well, recurring, that comes through on the back end of this for the, I can see it. I can kind of see it happening. So yeah, I don't know.
300 million. You think that's what
in 5 years? Yeah. Well, that's what they think. They think 300 to 500 million in 5 years. And it's sort of like there's a low base effect there. So
it's now at about 20 million a year run rate, say 23 million. Is that right?
They'd be on about 70 million in terms of revenue at the moment, based on what the CEOs said.
Okay. First half was 11.5 million. Is that right?
First half was, yes, 11.5 million.
Which is just finished. So they're thinking like another 60 for the rest of this year.
Yeah.
Wow. Okay.
Yeah. I have to go back and rewatch it, but that's the notes I made at the time. So unless I like,
okay. No, I can see that. Yeah, you're saying 33 million US government sale announced 16th of July, expected to be fully delivered and paid this calendar year. 10 million 2-year R&D contract announced 4th of July, following on the earlier all-time record. Yeah, interesting.
It could happen, right? It could absolutely happen, and you can see that as the situation evolves, that plenty of, well, we already know that military spending is kicking up everywhere already. Here, like in Australia, on the other end of the world, we're ramping everything up. It's not going to take too much orders to really sort of move the dial there. So it feels like a bit of a moonshot. As I said, I have a bit of a dirty feeling even talking about it, because I know how I can see myself on the other side of the speaker here listening, going, oh, seriously? But it's
I guess the other problem with these companies is that they don't normally make money. Defense contractors, I mean. Yeah. So there's a lot of revenue often. Like EOS had this. I mean, EOS had a host of problems. They're basically doing like a full turnaround on that one now.
Yeah.
I mean, one of the problems was the margins are always tiny in defense. I'm not saying that this, let me just say all this first because it might be a bit different here, but margins are usually tiny because it's the lowest cost bidder. You're up against these huge like defense giants which have heaps of scale. Often you'll win this contract and then you don't make any real money from it, and it's like capital intensive, etc. to bring it up. There's also problems where, at least with EOS, where they just weren't being paid because the governments were the customers and they would receive that. There's still like literally EOS is owed like $100 million by some of its clients, which is slowly now trying to be paid. But obviously DroneShield doesn't seem to be having those problems. Like the cash receipts seem to be kind of matching fairly closely with revenue, but they are still unprofitable, I guess, at the scale where they made 11 million in the first half. That was an unprofitable half, lost 3 million before income tax. I guess they would just want to see, that's probably the other side of the ledger to weigh up, is what happens with this. This half should be, from everything they're saying, a very good one for cash flow generation. And I'd probably just be pouring through the annual report, which comes out in February, to see that this like all flows through as well as delivered, because I think it'd be easy for the market to get too excited about revenue and kind of miss A, that maybe it's not profitable, and B, that maybe it doesn't generate much cash because you have to invest so much in it. But in saying all that, Ukraine war is an unusual one. There's been a lot of money being thrown at. I'm trying to get results very quickly. That can kind of open a door for companies like DroneShield, where it might take 5 to 10 years. Normally, you could have that done in months because they just the US government or the procurement team have a big budget. They've announced, billions of dollars of more spending. They just want to get it out as soon as possible. That'll help something like DroneShield, and margins and all those things are a lot more flexible when you're in that environment where you're being called for demand. And then I guess just the last comment is, hopefully the Ukraine war ends at some point. What situation are you in then? So just being mindful of how things are looking, what demand will look like post the war, if that hopefully happens.
Excellent comments. I do know some of the answers there. So gross margins for hardware are not disclosed for competitive reasons, but I hinted what he said, well north of 40%. It's like, for hardware. Okay, that's interesting. On the profitability, he said we would be easily profitable this year. So we'll see. Yeah, and they do have use cases for stadiums, prisons, ports. You know, the rest of it. But I mean, look, the potential is for this to run well ahead of what is sensible, and things can go wrong. So that's like, you really do point out the right things. All right, give us one. What have you been looking at?
Well, there's an interesting one, a kind of a conundrum if anyone in the audience is listening, but it's Vitura, which is a marketplace for primarily cannabis sale and distribution of medicinal cannabis products. And it's just an interesting one, and I'm interested in anyone in the industry that has had a view. It had an incredible year. Like if you look in review, it had huge growth and generated profit again. But the kind of weird thing is trying to figure out what's happening now. So yeah, I think revenue was up like, 75% year over year, and net profit up over 100%. But the unusual thing was that if you kind of track all their announcements, growth they talk about like the run rate of how many orders that they're putting through the platform. And that kind of hit a peak kind of like September, October, November last year at around 1 million units. I think September was run rating 950,000 units a year. November was over 1 million. December was a bit lower, and they just kind of been the same for the second half. Like the second half was around that 1 million units run rate a year, give or take. And it's just kind of weird to see, because before this, the business had been such a rocket ship. Like it literally been growing up to that point about 100% year over year. So you imagine something just growing 100%, 100%, and then just flat. It's just really unusual to see. And I've talked to management before, kind of answers with that. We had a good first half. We added a lot then, but I'm still not that clear on it. I don't know if anyone else in the industry listening to this wants to hit us up on Twitter at BabyGiantsPod, send us a direct message or any other thoughts on what could be going on. But yeah, the positive side had a because it had all that growth in the first few months of the first half and all the run rate kind of catch up, it still had a very good year and has got to be this platform now for medicinal cannabis products to go into pharmacies. The legal cannabis market still seems to be growing, but it's just kind of a bit of a puzzle to me why we hadn't seen the same increase in volumes. Why did it suddenly stop? Where there's mystery, often there's can be reward either way. Either you avoid something bad or find a reason to understand if it's something good. So
don't often see such momentum just stop.
Yeah, it's normally you'd see if something's growing that fast, you'd see it like teeter off, right?
Yes.
Like it just growth becomes harder and harder, like the top of the S curve. But this is just like like it's like a light switch kind of thing. So yeah, I don't know. I'm not sure what I can put my finger on what it is.
I wonder if it's a adoption phenomena where it's sort of like anyone who
wanted to,
it was like, oh, you see it, word spreads fast, you've got it like bang, and then from here it's more a slow burn of those that may sort of not be open or more skeptical towards this as a viable treatment, etc., etc. I'm grasping at straws here, man.
I think it could be. Maybe there's some TikTok trend that got everyone to try it, and maybe some people because I do think a lot of this is black market converting to legal, and it's medicinal, but I don't know. It's not that medicinal, right? It's like your old mate who needed it for his glaucoma when he was like smoking 5 joints a day or something. Like it's I feel like some glaucoma, man. Yeah. There's definitely medicinal uses, and there's very legitimate ones, but there's a lot where it's like
Well, we were saying before with like DroneShield, it feels stonky and smoke. It's like, come on, man, pod stocks. Like it is really hard. It's really hard to sort of have a serious conversation about it. But let's do that because, I mean, you've mentioned sort of the growth here, but this is profitable, right? They pay a dividend. They seem really well capitalized as well. They've got, in fact, their cash at the bank went from 16 million to almost $19 million. So this is a real business. And this is, never, I always think too, it's like never bet against corporate greed. It's sort of like when there is there is this amazingly large market that's just sort of been in the shadows forever, and it's sort of momentum is sort of shifting, and there is money to be made here, and I can see the zeitgeist shifting in a way where it does see, as you say, I'm actually fully on board with there's very legitimate use cases for all of this kind of stuff, and I can just see it shifting, and I can see that there'll be big business that'll line up to capitalize on that, and there's something to be said for first mover advantage. I don't know if these guys were first per se, but they're very early, and they certainly seem to be self-funding and at this point. So look, what's the PE is like 30 or something, which is not necessarily to your point, growth has to sort of kick back in at some point, but it's not crazy. So anyway, there's my attempt at being serious on Vitura. I'm actually I'm keen to. I'm open to it. I am very. I actually reached out to the CEO the other day. I haven't heard back yet. If you're listening, get back in touch. But I'd be keen to understand more about it, because I think there's, even within the investment community, there is a little bit of a giggle around it, which may sort of reduce the premium that may otherwise be there. If we were talking about some other pharmaceutical product and the numbers were exactly the same and the market opportunity was exactly the same, I wonder if it wouldn't be trading on a 40 PE or I don't know, something like that.
Yeah, I think there's something to that. I think I just check the why did growth stop, but it's still quite mysterious to me. That's the weird thing that I haven't found a good thing for. But no, I think that's a good point. Hey, Andrew, let's do AVA Risk, one that you've followed for a while. Do you want to just give a quick update? What happened with the latest results?
I thought it was a really good result. I really thought it was a fantastic result. The new CEO's been there for 8 months, completely restructured the team. They've just had let me read out the numbers here. Sales order intake was up 71%, group revenue from continuing operations up 54%, gross margins held steady, underlying EBITDA up 150%. It's just sort of like they're getting genuine traction on their products. They've long talked about the scalability of their operations. I think is actually reasonably evident that's in there. It's one of these niche sort of areas in perimeter detection where you've got this sort of relatively small Aussie company that I think is not unfair to say is a global leader in the tech, and you can even throw in AI, right, for the signal processing. So it's got everything, that the punters want. So I'm not saying that, these should be trading at $1 or anything like that, but I read the results and was surprised. Since then, the shares are down like 6-7%. Hey. Not quite sure. I'd love to know what the bear case is on this. I don't know. Do you have any thoughts?
All right, well, maybe we'll ask everyone to hit you up on Twitter and tell you about the bear case.
Tell me why I'm so wrong. I mean, I can tell you right now that I've been way too early on this thing, but they have actually, there's something more to the business than what a long-term share price will tell you. They have returned a significant chunk of capital with the divestment of services and very good dividends. They've got very good internal rates of return on the investments that they've made. It's also a business I think it's got strong tailwinds. I don't know. Look, I'm being hyper biased here. DYOR as they all say. In fact, the only heuristic you need to know is that Andrew seems positive on it. Stay the hell away. So I don't know.
I think it's a tricky one. Things can just fall out of favor and take a while to pick up. So if you do turn out to be right about it, I mean, this can be a good opportunity to buy more potentially. But when the story is just unknown and the share price hasn't moved for a while, it can take a bit of lag. Like you just do need some good results for a while to push through and get people thinking about it in a different light. So maybe it's a bit of that going on.
Yeah. I mean, there's another one that's I think well funded. They're not going to need to raise capital. It may have been that there was a net loss, or net NPAT loss that's there. There's actually reasonably well explained for some of the things that they were doing. They pre-ordered a bunch of inventory and stuff with all the supply chain stuff, which actually was a really solid move and helped them lock in lower prices. So anyway, there's a lot of sort of nuance and detail there, but I'll just say I thought the results were good.
Excellent. Well, maybe we wrap it there. Got to get back into earnings season. Some more calls to jump into, results and everything else. I'm sure we'll have plenty more to run through next week. But until next time, thanks everyone very much for listening. And you can hit us up on Twitter at BabyGiantsPod.
Yeah. See you next week.
Thanks, guys.